In this episode, we tell you how to invest so you don't lose your shirt. All right, welcome. This is episode 23 of Access Granted, and again, we brought Craig back here to talk about investing so that you don't lose your shirt, basically. So, Craig, when we're talking about that topic, the idea of margin of safety comes to mind. So maybe you can explain to everybody what the margin of safety is.
Yep. So our number one rule always is the same as Warren Buffett's rule, and that's don't lose money. And our second rule is don't forget rule number one. So losing money is just totally off the table for us. We never want to lose clients' money. And the way we do that is, or the way we ensure that we don't lose money is we build in a margin of safety into any investment that we're doing. And basically the way we do that is we identify the intrinsic value of a company or a bond even, and we know we've talked about intrinsic value in the past and what that means, but we identify the intrinsic value and then we just buy things that are trading at a substantial discount to that intrinsic value. That way a lot of things can go wrong. We can be wrong on a lot of stuff and we're still not going to lose money.
So we find out what the value is, what the intrinsic value is, but really what it's worth,
Yep.
And then we don't pay more than a certain amount below that, basically.
Exactly.
Right on. So just getting back to this idea of the intrinsic value, once we know what the intrinsic value is, why can't we just pay the intrinsic value? I mean, isn't that the fair price for what the business is or what the asset is?
Yeah, I mean, you would think that. I think the problem with that is valuing companies is not an exact science. So, we have a methodology that we use that gets us, I think, pretty close to what the true intrinsic value of a company is. But within that, we have to make certain assumptions as to what's going to happen in the future. And even if we're really accurate with what we're doing, there's going to be things that we just can't know at this point in time. So in order to protect us and protect our clients, we need to ensure that there is a margin of safety in there, just in case we're wrong on stuff. Because if we just bought it at intrinsic value and then we were wrong on a bunch of things, well, the client's going to lose money because we were wrong. So if we build in a margin of safety, we can be wrong on lots of stuff and we'll still be fine in the end.
So with markets and technology the way it is today, and trading so efficiently, is it really hard to find good buys out there with good margins of safety?
Yes and no. I mean, I think there's a lot of people out there who would tell you that markets are really efficient and you can't beat the market because people have so much information available to them and the markets are so smart. But I think actually the reason that there's inefficiencies in the market is not necessarily a lack of information in the past. It was more to do with the emotions that people have when they're investing, and those emotions aren't really going anywhere. Like if anything, you could make a case that people's emotions are even more pronounced nowadays with all the BNN and all of the information spitting out to people all the time. So is it hard to find these inefficiencies? Yeah, it is, and especially right now because we're 10 years into a bull market. There isn't a lot of cheaply priced stocks out there, so the opportunities are few and far between. But at the same time, we don't need a lot of good opportunities to invest in. I mean, Warren Buffett always says, like, if you treated your investments as if it was a punch card and you had 20 punches for the rest of your life, that would be all you would need. You every time you make an investment, you punch that card, and you only have to do that 10 or 20 times in your lifetime and do it well, and you'll be fine. And I think that's a good lesson for everybody to know.
All right, well, that's it for that topic. Thanks so much, Craig. I mean, margin of safety obviously is a really important topic when you're looking to invest, knowing where you have to buy at in order to make sure you don't lose your shirt in case things go wrong. So that's a really important topic and something that we look at every day. So with that, we're going to close this episode off. But again, be sure to send us your questions. We're getting lots of good feedback. So cgwfamilywealth@nbc.ca is our email. cgwfamilywealth.com is our URL. So go to our website and check us out. Thanks very much again. Ready, aim, fire.